Nvidia and AMD are my top two semiconductor stocks and the two biggest positions in my portfolio. And luckily for me and many other investors that follow this channel, both stock prices have gone up insanely thanks to AI. Today, I want to take a closer look and decide if I had to choose one, which will it be and why? The answer might shock you. And for those not familiar, my name's Jose Navarro, and I spend way too much time reading about semiconductors and AI. But thanks to that, my master's in electrical engineering, and my experience working at various innovative companies, I believe I have created the number one semiconductor podcast for investors. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
So how I want to start off with today's episode is just do a nice one-on-one of each companies, because the more we understand of how they make their revenue, the more we understand what are their growth opportunities. After that, I also want to take a closer look at financials, but more importantly, I want to take a closer look at two scenarios. Like I mentioned in the intro of this video, I believe a big portion of the run-up for both these companies is thanks to AI. So I want to create a scenario is, if AI is real, how much more can they benefit? And if AI is not real, what would be the downfalls, or can they continue to grow? And this can obviously help me kind of make my final decision. Finally, I just want to take a closer look at forward PE ratios to kind of determine how valuations are sitting at current levels. All right, so let's start off with AMD. Currently sitting at $177. In the past year or so, the stock is up roughly 112%. This is a company we really talked a lot about throughout the many years, but most recently we were discussing this on late October when the stock was sitting below $100, as I did believe that was a great opportunity. Right now, in the past few months, obviously that does seem like a great call, but we will have to see in the future. Now, for those that are not familiar with AMD, they are in four main segments. Their data centers, and their data center is mainly contributed by their server CPUs. Their biggest competition here is Intel's, but they do have some GPUs, some FPGAs, some DPUs, and some other chip solutions in this market. But right now, it's mainly dominated from the CPU market. Now, in the client, these are the CPUs that go into your laptops, into your desktops. And here, most of the market comes from the consumer goods and, again, the CPU space. Now, in the gaming market, there's a little bit of different solutions. Here you have your GPUs that go in laptops and desktops, but you also have chips that go into various gaming systems like the Xbox, the PlayStation, the Steam Deck, and the list goes on and on. Finally, they have their embedded market, and here they have FPGAs and system on chips that go into a various set of markets like the automotive, like the fintech, like the healthcare, aerospace, and defense, and the list goes on and on. Now, if we take a closer look at their most recent quarter, which they just reported up less than a week ago, we can see that most of their revenue comes from data center. Roughly 35% of their revenue comes from this market in the most recent quarter. The other three markets, client, gaming, and embedded, are in the low 20s. Obviously, client being a little bit more ahead, but the embedded market is still within that 20% range, give or take. So it does seem like it's a little bit more on the data center market, but any of these other segments can definitely help push revenue and help push earnings overall for AMD. Now, if we take a closer look at Nvidia, and this is a company we talk about almost on a daily basis here, we can see the stock is up roughly 213% in the past year or so. And again, this is one that we were definitely taking a closer look at during this overcorrection in 2022 when the stock dropped to the low 100s. So like I mentioned, this is the channel for semiconductor investors. Now, Nvidia has, very similar to AMD, four main markets. The data center. In the data center markets, they have full complete systems that go into data centers, and these are equipped with their GPUs, their DPUs, their networking solutions, and their AI software. Most dominantly here is the GPU market. Now, if we take a closer look at gaming, here are the GPUs that go into PC gamings and PC laptops, and they also have a clouding-based gaming solution called GeForce Now. Now, their professional visualizations are GPUs that go into workstations for aerospace, for engineers, for architectures, for construction, for manufacturing, for content creators, like we see here, professional visualizations. And finally, we have automotive. And the automotive has a lot of hardware for the automotive and robotics market, followed by a lot of software and AI solutions for the space. So these are the four markets. But in their most recent earnings that happened a little bit less than 3 months ago, the company broke down that data center was roughly 14.5 out of $18 billion of total revenue. So roughly 80% of total revenue comes from the data center market, and the other, I want to say 18 or so percent comes from gaming, and the other 2% comes from the other few markets that they hit. And I believe this is very, very important, especially for what we're going to look at in the future, because right now we can see that the data center market is what really weights out on the overall growth that Nvidia is seeing right now. All right, so before taking a closer look at each individual segment, what I wanted to do is take a closer look at the company's balance sheets. More importantly, total long-term debt, cash and short-term investments, and free cash flow. If we start off with Nvidia, total long-term debt of 9.7 billion. In its most recent quarter, the company had free cash flow of $7 billion. So this company, and we can see from since 2023, thanks to this whole AI boom, the amount of free cash flow has increased dramatically. Now the company is sitting at about $18.2 billion in cash and short-term investments. Now, if we take a closer look at AMD, AMD's balance sheet is not that bad either. It does have way more cash than total long-term debt, so cash and short-term investments of roughly 5.8 billion and total long-term debt of roughly 2.5 billion. Unfortunately, unlike Nvidia, this one has not seen that big boost in AI at the moment, so their free cash flow is sitting at $242 million. It is important to know that AMD has also seen some other things like inventory correction hitting its most dependent consumer segment, which is causing their free cash flow to go down. And this company is investing a lot in things like their upcoming CPUs and their upcoming GPUs. All right, so next, what I want to do is take a closer look at both these companies and take a closer look at how their revenue segments can do if AI continues to drive higher and higher. And then the second segment would be, what if AI slows down? But remember, there are other computational innovations like autonomous driving, like the metaverse, like EV vehicles, and the list goes on and on and on. So there are more innovations happening throughout the world outside of just AI. Obviously, AI can fuel all those and can be a subsegment of all those, but without AI, there's still a huge growth in innovation throughout the world. So let's start off with AMD. I want to say the light green determines that there is growth opportunities. In the data center, AI driven, they do have the opportunity to sell more CPUs, as we might see an influx of more data centers pop up. There is a huge potential for GPUs. And the reason for AMD that they are not super green, like we'll see for Nvidia, is that AMD right now has much to prove in this market. We know that they just released the MI300X and that there's a lot of talks about it and big players are buying it. But at the end of the day, we do not have it on paper on how much they can really grow in revenue. So this huge potential for GPUs can be a dramatic reason to be very bullish on AMD. The second thing for embedded is more computation needed in various industries, right? The embedded market, which deals with FPGAs and other system on chips, with AI driven, the fintech, with AI driven autonomous vehicles, with AI driven aerospace and defense, you're going to need more computation in those markets. So the embedded market should, in theory, also see a decent boost. In the client market, there is this new AI PC era where we're going to start to have new AI chips go into consumer electronics, but I don't believe this would increase the shipments in the long term. We might get a short boost, but I don't think it's going to be anything too crazy. Now, in the gaming market, I do believe it would increase the amount of GPUs needed, as you need more GPUs for AI workload. Now, if we take a closer look at NVIDIA, In their data center market, I do have this in super green because if AI continues, this one is going to moon in forms of data center revenue. And let me explain why. Nvidia has definitely had that partnership with supply chain issue with the supply chain managers like TSMC to provide the most amounts of GPUs. While AMD could take market share, at the end of the day, this is a supply constraint, and we have seen it on paper that Nvidia for sure has the lead in the supply chain line right now. So if AI continues to drive, while others can take market share like AMD and Intel, Nvidia will continue to hold the lion's share. Now, thanks to AI, like I mentioned, the automotive will need more computation needed in the auto industry. Professional gaming, you are going to see an increase in GPUs for AI workloads. And right now, we're already seeing that, right? A lot more people are buying high end GPUs for AI solutions. Now, let's focus on the non AI. Let's say AI becomes just a 1 year thing and big tech stops investing in this. But like I mentioned, there are other computational innovations. Data centers, in my opinion, for AMD will continue to be strong. So we're going to see more CPUs and potential for more GPUs as well. Now, the embedded market, again, there's various innovations that you're going to need more computation needed in those various industries. In the client, while there will not be a PC era, we are still seeing an inventory correction easing. So you should see an increase in shipments, which should bode well. And in the gaming, you still have your typical growth in future of gaming, like augmented reality, virtual reality, and metaverse. Now, for non AI, for NVIDIA, I think this is where things can go really, really south. The demand for AI will really decline the revenue in the data center market. And for me, that is a huge, huge red flag because we saw 80% of this company's total revenue comes from the data center market. And right now, there's also the need of GPUs for accelerated computing, but I don't believe that demand of accelerated computing will offset the decline of AI. So for me, that's a big, big red flag for a big portion of this company's total revenue. Now, in forms of all the other markets, I do believe there's plenty of revenue growth opportunity there as we continue to see innovations happening in other industries. Now, this brings me to looking at their forward PE ratio. And the forward PE ratio is the end of this fiscal year. For AMD, would be at the end of December of 2024, and for Nvidia, it would be the end of January of 2025. They are about a month past AMD in the quarter, but I don't think that's a big difference. So Nvidia's PE ratio is sitting at 32. AMD's PE ratio is sitting at 48. Now, I would say Nvidia's PE ratio is still looking pretty attractive if if the AI market is true. If the AI market is not true, and this we're going to see some slowdown, and right now I've done plenty of videos that showcase, at least for the short term, AI is here to stay. But in the scenario where you're not a believer of the AI market, then I do believe Nvidia might be looking pretty expensive because that revenue will decline pretty quickly and the PE ratio will increase dramatically. Now, AMD, I do believe it is sitting at very high PE ratios for the next 12 months. If AI is true and they can increase their overall revenue in the GPU market, this might become very cheap. If not, this is definitely sitting at a very expensive level. Now, if we take a closer look at forward 1 year, Nvidia drops down to 27.36. Again, this is very cheap if the AI market is as expected. AMD's drops down to 32.61. Now for AMD, it doesn't look too cheap. So if I had to choose one or the other, I think it would depend on the question. Do I believe that the AI market is real, or do I not believe that the AI market is real? If my answer is yes, I believe AI is here to stay, I think Nvidia is by far the only choice to go about. If AI is not in your future thesis, then in my opinion, Nvidia's PE ratio and Nvidia's price can tank dramatically. Now, if maybe one believes that, hey, AI is kind of here to stay, but I still want a company that's not truly dependent in AI and can continue to succeed in its current valuation, even without AI, I think AMD is the safer choice because if AI is not real, while AMD stock price could tank, I don't believe it will tank as much as Nvidia's. Again, this is all dependent on where the AI market will be next year and the year after that and the future from here on out. So I hope you guys enjoyed today's episode. Take care, have a good day, and let me know in the comments below, what are your thoughts? Do you believe the AI market is here to stay, or do you believe Nvidia is completely overvalued right now? Take care.